Welcome to Trading Lounge and the daily US stocks for Friday, May 20th, and just having a quick look on the NASDAQ to get an overall feel for the stock market. As you know, we've had wave 1 here and we've been tracking wave 2 to the upside. Turned nicely. We've got one short trade in. We looked at taking some profit down here. I ended up getting another little wave down here, and that's also on stocks as well, so that threw me out a little bit. So we're looking for an A wave, a B wave and a C wave. Having that extra little wave here has clicked us in a little bit early as well on this. But I still want to get a position in whatever markets you're trading here. Now this is the 50-60% retracement level. Now it may not get that far. Let's just check on this. That's about the equality there. It may or may not get there, okay? So, but we do want to get a position, a couple of positions above 12,000. So you could probably think to yourself, well, we do have this as an impulse wave here, so that means we should get a correction. So getting a position at say 100 and 200 here, that would suffice, and then another position under the 12,000, and then another position under the 1800. Now the 11,500, we're going to see a bounce off that as well. But as expected, we're getting our bounce sort of off our lows here, so that's all sort of on track there. And just borrow these for over here when we need them. And yeah, so that's kind of where we are at the moment with all of this. So we just really want to keep sort of adding to the short trades. The other point that I want to make as well is that we have wave 2 up here, so that means we're in wave 3. So we'll also be in wave 3 here, and also too when this plays out. I haven't done that. I need to sharpen that up a little bit. Let's just move this out of the way. It will probably be wave 1 to here. You see how this was wave 1 to this wave 1. This wave 1 will be to this wave 1 here. So I really should just bring that over here, and I shouldn't lead you astray at that point. Now what will happen is that we'll get 5 waves down here roughly, and then we'll see another ABC pattern. It may want to test the 12,000. You know, markets are like with large numbers, but it will also give, what you could do is we need to look whatever that distance is there, and I'll just copy this one, plonk that there, and I'll make it a little bit lower because we don't want to kind of miss it out. And also to here, you know, I mean, I'm very happy to make that lower as well. Now that sort of brings us into a couple of things here. We can look at shorting that there, and also too there'll just be, and just to make things more complicated, there'll be another wave 1 here and 2 here as well. And we talked about a lot about this yesterday as well, but it doesn't hurt to go back over it. Now the other point too to make here with these retracements here, because we're going into the third of the third of the third of the third, sometimes they don't really pull back as where we want them to. And also I could make a mistake here that we could already have the correction. This wave 2 here could also be over there, and we could actually just retest back up here somewhere and then come down from that point. So in that case we need to make sure that we've got a long position below this low here, and we also want to add under the 11,500 when that becomes the resistance. But there will be a bit of a battle here. Now that I've said that, it probably won't be true, because if we do rally back up to here, we'll have the third of the third of the third of the third, so it might just cut straight through here like butter and make a fool of me, but that's fine too. But yeah, anyway, you kind of get the picture where we are with this, you know. So it's kind of, we're going to go into a bit of a sharp move. Now it may be that Monday, as always, Monday's got a record for bull days, but I've seen some pretty horrific bear days on a Monday. 1987. That was a long time ago. But anyway, that's the way the cookie crumbles. That's where we are already. So enough waffling on that. So when we look at, I'm just going to stay with the intraday here. You know, we've been working this is Apple, and we've been working the ABC to the upside. We've got some positions in. We've had an extra wave down here, but I'm still going to call it wave 1 down here. Still looking for a rally. Will it get all the way up to the 61.8%? I doubt it. None of these here have actually rallied back to where they, you know, should be. So really, I think just eyeballing things up, it will be somewhere around here, be something like that, you know. And we could just cascade down lower as well, but we're kind of looking for some type of rally, you know, and then we need to, you know, basically find our way in here further, you know, to keep adding. Under the 38 would be good, and when we're talking about the 38, we don't need these up here now, so we can bring this down to group 2 here, 137.20. That's good. Take that 148, that will be 136.50 there, 136.50. All of that is group 2. So once you can visually see group 2 as the resistance, then you can look to add to that as well, and then there'll be 135. You can also add to that, and then 133. You'll start getting bounces here for this. So really, you just kind of want to, you know, there's a beginning, a middle, and then to a trend, and this will be, you know, wherever we are here, this will be the beginning of it, and we just want to leave the stop out of the way in all of this, you know. It's very difficult to get through a series of 1s and 2s, you know. But anyway, we're on the right track. It's not perfect, but less is more, so very small positions. I mean, I like to think that, you know, I mean, it's quite helpful really when you think about the price over here. Then you think to yourself, okay, well, I've got X amount of money. I could put those into certain, you know, certain positions. So you could space them out every every sort of $2 or something, you know, or every dollar, or, you know, and then you've dollar cost average, and then you kind of know where you are, and you've got a plan, and you don't have to sweat it out if the market goes a bit further up or down, because you know you got to keep your stop initially at above the 61.8%, you know. So you don't have to shovel it all in at one go. Okay, Amazon. We've got our ABC back up here, and yeah, so I'm still looking at this as, all of this is wave 1 here. We can take some profit here, as mentioned yesterday. We're looking for an A and a B and a C wave here. It may not be, it does appear that we've got a little 5 waves there, so that is helpful for that. And yeah, so we want to sell in the box. We don't want to get stopped out, and we want to look to add as this moves down further. So we're going to get another bounce off the 100. 1 is the strongest number. So we've got wave 1 here, wave 2 here, wave 1 and 2, and 1 and 2. So these are all places you can add to, and you can add, because we're working with 5 wave structures here, that means we can add on the rallies pretty safely, because normally we would just be wanting the market to prove to us that it's weak, and we would be selling new lows at that point. So yeah, anyway, everything's going according to plan here. And NVIDIA, we've got our stop up here. We're looking for the ABC pattern. We've got a short here. We actually got triggered in here. So this is already pulled back to its space. So that's good. Yeah, it's all looking pretty good. So yeah, I mean, it's just a reason we may not go to the upside, you know. We're in minor group 2 here, which is 65, 72 and 80. So it's actually holding up here in support at the moment. Once this 72 here becomes the resistance, you may be short there, you probably not, maybe there, so you can just drop that down to that one there. So you want that, it's retested it once here already here, but it's probably a 5 wave structure here. But once you visually see, doesn't have to be perfect, and it's once you can visually see that 72 here as the resistance, then you know that pretty much at that point we'll be dropping lower at that point. And I've got this under the 170 here as well. You could also drop that down to the 168 as well, but we definitely want to be at the 165. You know, you definitely want to see, once that becomes the 165 becomes the resistance, then you want to be looking at those lows here and shorting those lows, because once it's finished with group 2 here, it'll be straight down to the 50 here, and it'll move reasonably quickly. The 160 and 158, 155 and 153, and they'll all sort of play out as well, but it will just be on our way at that point. And Berkshire Hathaway, so we're looking, got a short position here and here and here, and looking for, we may not get these rallies, you know, I'm just not quite sure. So either way, the next trade here, if it goes up to here, pull the curtain down a little bit and make sure you get in. And secondly, we want to be short, you know, another position in here and under the 300. If it does go up here, then you know that it's going to come down here. There's going to be another bounce off here like this. This would be another way of doing this here. So we could put this under that low there. Do you know what I mean? That would be there. Then you can lift it up to that low. So you can do the same over here for that. But we still want to get one under the 100, under the 300 here as well, the major trading level. And we want to leave the stop out of the way at this point. We want to leave it above the 61.8. We don't want to get stopped out. And we can move it down once this number here becomes the resistance, or at least the 5 becomes the resistance. We can bring it down at that point. And Google, so yeah, I mean, it's slightly different count here. I'd probably have to count this as 1 and 2 here, and then sort of 1 and 2 in here. So there could be a bounce off this level before, if the rest of the market's going to bounce and then move down. But yeah, it's just keep adding for this, and we'll move the stop down in the next session once this session's finished. And Meta here, we're going okay. We've got a short here. I've just brought the stop down from wherever it was up to here, because we don't want to get stopped out. I mean, it looks to me, it looks pretty corrective here. I think we could actually pull that down into here, because in this case, we've got this here as the A wave, the B wave, then a C wave. So an ABC here for the A wave, the B wave, and a C wave here. And then I've got an impulse wave here. Then I've got a corrective wave here. This is an impulse wave. So I just sort of see this kind of working lower, you know. So we just want to keep sort of adding to it, really. So it didn't really get to its space up here, but look, if I'm wrong, I'll just leave this over here. We'll just copy this over here. If I've made a mistake anywhere, and I could have made a mistake, because I could probably look at this as 1 and 2 here. All of this is the 3rd wave, the 4th wave, and the 5th wave coming down here, but no, it doesn't really add up either. Anyway, look, if it does rally, then it'll just give us another opportunity to short, and I'm going to bring that down further as well in that point to make sure that we get in. Yeah, so just keep adding to this. Yeah, okay. Just think about adding more down here as well. We're in wave 2 here, and then we've come down for 1 and 2, and we're going down for the 3rd wave here. So we definitely want to be getting in. You want 3 or 4 trades in this section here, definitely. Tesla, it's just the bigger picture here. So just, it's just continuing down. So from here we've got 1 and 2 and 1 and 2 going down for the 3rd wave. But we'll just go to the 100 ticks on this, where we've got the positions. Let's just have a look here. So just borrow these over here. Just got to clean a few things up. I get a bit busy. It's hard to do hard to go back and do it later. Do it on the hop. It makes it a bit easier. So that's where we are. We've had this corrective. I mean, the takeaway here is that this move here is in 3 waves. That's pretty clear to see. So that's and now that this has moved down here, it's moved below wave B here, so it forces it to be an ABC. Otherwise it could be 1 and 2 and 1 and 2, but now that it's broken the B wave there, it's forced it to be a corrective wave. But not only that, it means that that low there is going to be taken out. So I think I may have moved the stop down here a little bit. Looks like we got clicked in here, and we can look at that in different ways. I'll just put it under there. It looks impulsive down here, so I'll just put it there just to get another one above the 700. And even though I've got this on the low here, when I do that, it just simply means you need to wait for, you could take it out if it, you could set your orders up to take it at that point, 1 point below that, because you want it 1 point below that, because all the orders will be sitting there, right on that low, and probably a point below it. So like if it was sitting at 6, if it was sitting, and you kind of got to use your noggin a little bit, I mean it's above the 690, but if it was sitting at 690, 693, well, that's the closest largest number here, so there'll be orders sitting at 693, 692, 691 and 690. So you really want all those orders cleared out, so you can come down to the 89. So you could come down to 89.4 or 89.5 or something like that, because you want all those supporting orders to be cleared out, and you want the market to prove to you that it's strong to go down at that point. This looks like a nice A, B here, and 1, 2, 3, 4, 5 for the C wave, and a nice impulse wave here, corrective here. I mean, it could be an A and a B and a C wave coming down here, and one more move up and down again, but we're not going to we don't want to be thrown off the boat just yet, do you know what I mean? So we'll just keep the stop out of the way and look for a classic trading levels pattern at this point. It may be simple like this here, or coming square here, but it also may be complicated as well. So complicated just means that it comes down and bounces off the price point, comes through it, and then sometimes it just goes to here and drops. That's why you work it from underneath, but it can come back above the level, and if it comes back above the level, you need to rework the trade again. So in this little pattern here will be an image of this larger pattern here, and you need to rework it to the downside. But there's lots of things you can do. You can short on these highs here, you can short under here, you can do all sorts of things, but yeah, 700 is a big number, and the point being here, it's not the resistance yet, is it? We know that this is corrective here, so that means if we had 5 waves coming down, which we do, so we know that we can sell the rallies. But also too, we now know this is corrective here. We need to make a new low here, so it gives us more confidence to buy any of the short any of the rallies to the upside, and eventually the 700 will become the resistance, and you'll see that, and you'll be able to add again. Yeah, and the next level, the 650 doesn't seem like a big number, but it will carry more weight than 700 and 600, but 700 every number's important. It's just everything's got its pecking order. And the next one is square. So square caught me out, so we've been stopped out of square. It was interesting because I was looking at this and I was going, well, and I even mentioned yesterday it counts quite nicely as 5 waves up there, so that was a bit of a thing. So yeah, now we can count it as an A and a B and a C wave. We could also count it as more bullish. I mean, Afterpay is teaming up with Square, so obviously that was a positive thing. So, but still, yeah, so I'm not too sure. I wasn't sure about these little lows in here to count 5 waves up. There may be another little move up here for this to come up here before going down. So I'm thinking that once if that goes up to here or just drops from here, when it does drop down to the 80, there's going to be a bounce. So you can short the B wave in the bounce. So there'll be an A and a B and a C. So you can short the B wave here and then under here, because this market will be dragged down with the finance sector. It just didn't finish to the upside yet. So apologies for that mistake. So the finance sector, the XFL here, in a nutshell, we're looking down, well, as you know, we've been looking for the ABC to the upside, looking for the turn. We've got the turn coming down. I think I also got the low of this here wrong. It doesn't really matter. It hasn't done any damage. We've got sort of three waves here. I just don't know if we've finished to the upside yet. Will it pull all the way to the upside? It may or may not. But if it does move up there, we want to short it again. We want to keep the stop out of the way. You can take some profit down here if you wanted to. And if the market just does drop from here, you'll be back in it at that point, so you haven't lost anything. So if it does pull back up there, you can just take, you know, let's just say that if it moves back up above this level here, you can take a percentage, you know, because it's stuck under there at the moment. You know, that looks a little bit, it looks like an A wave, a B wave and a C wave here. That's what it looks like. If it gets a classic trading levels pattern back on top of whatever that number there is, 33, then look to get it, because it won't be a big move to the upside. It'll have some sort of equality in terms of length to that, so it'll probably be there. So what we might do is we'll just bring the curtain down a bit here, so we just get triggered in here. And then when it comes down, it's going to bounce off this level here, and it's going to give you opportunities to keep moving in. And it's okay to sell this, because once again, we've got this A, B, and C wave here, but we've breached the B wave, so it's confirmed that it is corrective. And now that we know that it's corrective, well, eventually it will take that low out here. So you can, and we've got 5 waves here. So there's 2 good reasons to sell the highs in all of these here, you know. So the banks are the same. We'll look at America and JP. So the Bank of America here, we've got a couple of short positions in. Once again, the B wave has been breached, so we know that that is corrective. We'll make a new low here. And this is impulsive. I'm unsure about the rally here. You know, the thing is that it can go back to the 61.8%. It hasn't really made it hasn't made an effort to get up there yet, but it has created a base here, hasn't it? You know, so based on that base, it could rally, and that's our 50-60% thing over here. So I might just bring that down to the 38.2% here, just so we get in. Now the same thing will occur here. If this is the A wave here, then an A and a B over here, that's got to be the B wave over here, because that's in 3 waves here, and that will be, I mean, that could be down for 1 and back for 2 and coming down here further, but otherwise an A wave here, an A, B, C for the B wave, and over here to the 35. And in fact, we should just bring it just a tad below the 35. You could take any heat if it goes up a bit further, and we definitely want to leave the stop out of the way. We've got 2 good reasons to leave the stop out of the way, because we know that's corrective, and we need a low that will be taken out, and we also know we've got an impulse wave here. The thing is that it may go right to the 61.8% and then come down, or it might just sort of go to here and then come down, because we're in the third of the third to the downside. Sometimes I don't rally back. I mean, in its history here, it went right in the middle of that, so it could go into the middle of that. But also what I wanted to say is when it comes back down here again, it's going to bounce back up here as such, and then come down, and there'll be a bounce off the 34 and so on. So you can short under here, you can short that rally, you can do lots of different things. The main point is that we're in the third of the third, and you need to you need to, you know, get some positions in here, you know. Okay, and Morgan's will be the same. So Morgan's here, we've got a few positions in here. We definitely want to leave the stop out of the way. We don't want to be triggered in here. Yeah, I mean, it just doesn't look like a good B wave here. There's an A wave and a B wave. It looks like it's down for 1 and ABC back for 2. So anyway, just to protect ourselves, we're going to short that under there. Otherwise, it's going to push up. Will it go to the 120 here? So what we need to do is we just pull that down a little bit here as well. Just make sure that you get in. That's the main point with all of this. And we can just borrow some of these here. It just doesn't look like a B. I could have that easily wrong, so don't put any emphasis on that. But if it does go up there, it's the same story again. It will come down to these supports here. It'll have some sort of 3 wave there. It could get really scruffy. You see how these have got so many different lows here? You start with that one, then go to this one, and then go to that one. Do you know? That type of thing. And this is also group 2 here as well. So we want to be shorting under group 2. Once that becomes the resistance, or you can just use the 72 there. I like to use the 72 and the 65, so I'll do 2 at that point. And also that rally, that B wave rally here, and also this one here as well. I mean, because at the end of the day, it's really about managing your exposure, and putting in small trades just makes it a little bit easier to handle, you know, because you can put the stop above the previous position, and you just sort of doing it this way, you're sort of confirming the wave count as well as you're going. So it's just a refinement on what you're doing. I mean, yeah. So, alrighty, well that's it. Thanks for tuning in, much appreciated, and enjoy the weekend. Cheers.